Well, markets have been waiting for 2 years for this event, and this week, finally, we're going to see the US Federal Reserve cut interest rates. Hi there, everyone. Welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 17th of September, 2024. And before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. So like I said, we're going to see the Federal Reserve cut interest rates this week. It's been long expected. In fact, at the start of the year, we were expecting to see it around February and March. However, we've had to push out those expectations for several months, and that's because inflation has been stickier than expected. And in fact, the economy has probably held up a lot stronger than expected as well. There's a few reasons for this, but regardless, we will see the rate cut this week. Markets are debating whether or not it's going to be a 0.25% cut or a 0.5% cut to kick things off. I think it would be very, very silly to cut a 0.5% and just really get straight into it that quickly. Inflation is still sticky, and in fact, we're seeing the US government run pretty much record deficits, record amounts of spending pretty much, and that is pumping more money into the economy as well. And I do think there's a real risk that we see reinflation or inflation rebounding if they do go too quickly on the rate cuts. However, we have also seen US jobs data start to weaken. We've seen other economic measurables start to weaken. And, the counter argument is that if they don't cut very quickly, we might see economic recession in the US. To be honest, I think an economic recession will probably prove to be unavoidable. And the harder that they try to achieve a soft landing, the more likely they are to see a reinflation scenario, especially with the amounts of government spending going on at the moment. That's going to occur on Wednesday night Australian time. We're going to see basically whether or not they sort of favour the soft landing scenario and start aggressively cutting with the 0.5%, or whether they favour the more cautious approach and try and stop inflation becoming a problem again and go with a 0.25% cut. Wednesday night Australian time. There are quite a few other economic data and events coming up as well. So actually tonight we're going to see US retail sales, and they are expected to slow. So we're expected to see US retail sales contract by 0.2%, and core retail sales are expected to grow by 0.2%. These numbers are really starting to slow down, and they are starting to point to that US economic slowdown that I was talking about just a moment ago. Despite the large amounts of US government spending, which is pumping money into the economy. It really is an interesting sort of thing to try and weigh up. But overall, I think if it weren't for that huge US government spending program, the economy would be in a much worse position than they're in at the moment, and perhaps we would have seen interest rates cut a long time ago. So that is, a pretty sort of key event tonight, and it could shape the discussion going into the Fed meeting the following night. Outside of that, we've actually got a few Australian events as well. So we've got Australian unemployment occurring on Thursday morning Australian time. Unemployment is expected to hold steady at 4.2%, but there are expected to be a slowdown in jobs created. And, recent Australian unemployment data has been pretty weak. We're not really keeping up with the necessary pace of jobs growth to keep the Australian unemployment rate stable. If the current pace stays the same, we will see unemployment start to rise unless we see a drop-off in participation. That doesn't really bode that well for the Australian economy, and it could be a situation where the RBA is forced to consider cutting rates to support the economy, even though Australian inflation is still strong. Indeed, Australian inflation is still well above the RBA's target range. And yet Australian economic measurables have definitely started to weaken. Like I said, unemployment hasn't been great, jobs creation hasn't been great, and economic growth hasn't been great either. The Australian economy is actually teetering on the brink of recession. We've had 2 quarters of 0.1% economic growth. If we had a little bit less immigration, we'd actually be in a recession right now. And so we're actually teetering on the edge of recession while inflation is still, well above target range. So the RBA might be forced to make a difficult decision in the months ahead, and that is whether or not to support the economy or whether or not to, continue to tackle inflation. We will get a bit of an update from the RBA next week. They're actually going to meet on, I think, Tuesday and Wednesday next week to discuss their own interest rate policy. They're almost guaranteed not to do any change at that meeting, but we will get a little bit of a clue from their statements, accompanying that meeting. It's been, quite a long time since the RBA said anything new in their statements. Most of the statements are a copy and paste job from the previous ones, but hopefully they do give us a little bit of a clue as to what they're thinking, because to be honest, it just seems like they're waiting to see how things plan out, and they don't have a great idea of how things will turn out. Finally, I did want to touch on that markets are at all-time highs. Now, for the US economy, that isn't that surprising. Their economy's actually been going somewhat well up until the last couple of months. Company earnings growth has been not too bad, and they're expected to grow further next year. And they are approaching their interest rate cut this week. And so US markets being at all-time highs isn't that unsurprising, given that this is the interest rate pivot that markets have been hoping for. For the Australian market, however, I think our all-time high is very surprising. In fact, I think it's almost indicative of a bubble. Looking at share valuations relative to earnings, relative to dividends, relative to many factors, Australian markets are at their highest ever level. And like I said, that's with our economy teetering on the brink of recession, but it's also with our key commodity at multi-year lows. It's also with our biggest trading partner demonstrably slowing down. It's also with Australian inflation remaining fairly sticky. So it just seems like we've drifted higher following US markets rather than considering our own plight. It's going to be very telling to see what our market does after the bank reporting in November. They are expected to report lower earnings than last year, and yet their share prices are 20 to 30%, in some cases more higher. So we've drifted up with the US. Will we diverge at some point if our earnings growth doesn't match their own? Very hard to say. It hasn't happened this year at all, despite lower earnings growth up until now, but it will be something to watch in the months ahead. So let's have a look at the charts for this week, guys. This is the US S&P 500. They're at their own all-time high resistance, like I mentioned, going into this key Fed meeting on Wednesday night. 5650 is the key level to watch for the S&P 500. There is maybe another slight level above that at 5675. And we would expect these levels to be tested, or at least a move back to the downside following the events of the next 2 days, and that's the retail sales tonight and the Fed meeting on Wednesday night. Looking at our own market, we're also up at our own all-time high resistance level at roughly 8150 or 8150 index points. And we can see that 8150 level on the chart here. We first reached it at the end of July, start of August, and then obviously we had those 2 days of strong selling, and that occurred with the last US jobs report and the Japanese Bank of Japan interest rate rise. So we got to that level then. We've reached that level over the past 3 sessions as well, and we sort of stalled out here. I think we're going to wait to see what happens with the US markets at their own all-time highs before deciding if we want to go that little bit further ourselves or if we want to pull back. For our market, if we do break lower, there's some noise around 8,000 and 79.20 to the downside, and if we break higher, very, very hard to say where we will head. So I will wrap it up there for this week, guys. It's the week that most investors around the world have been waiting for. We're going to finally get that US interest rate cut. Will it be a case of buy the rumor, sell the fact, or will it be the bulls on parade that many have been hoping for? If you guys know, let us know in the comments below. Otherwise, we'll see you guys next time. Bye for now.